Welcome to this lesson on double entry system. I'm CPA Paul Gaido. Kindly remember to subscribe to this YouTube channel, Treatise of Accounting Information Systems. In this lesson's objectives, we are going to cover the history of double entry, introduction to double entry bookkeeping, the rules of double entry system based on elements of accounting information and based on classification of accounts, and the effect of double entry on the trial balance. Double entry system was first documented in 1496 by Luca Bartolomeo Pacioli, who is the father of accounting. Pacioli described an accounting entry as either a debit or a credit. He defined debit to mean someone who owes and credit to mean someone who trusts. Double entry bookkeeping is based on the duality aspect principle of accounting. Double entry means that every financial transaction has equal and opposite effects that affect at least two accounts. Every financial transaction has at least two accounting entries, that is, a debit and a credit. Every debit must have at least one corresponding credit entry, while every credit entry must have at least one corresponding debit entry. Therefore, total debits must be equal to total credits. Double entry is best presented in a T account, whereby debit entries are recorded on the left side of the T, while credit entries are recorded on the right side of the T. The rules of double entry bookkeeping based on the elements of accounting information are: an increase in asset is debited, while a decrease in asset is credited. Assets are expected to have a debit balance. An increase in liability is credited, where a decrease in liability is debited. Liabilities are expected to have a credit balance. An increase in equity is credited, where a decrease in equity is debited. Owner's equity is expected to have a credit balance. An increase in revenue is credited, while a decrease in revenue is debited. Revenue is expected to have a credit balance. An increase in expenses is debited, where a decrease in expenses is credited. Expenses are expected to have a debit balance. Any increase in drawings and dividend is debited, while any decrease in drawings and dividend is credited. Drawings and dividend are expected to have a debit balance. Lastly, in control account, we have contra entries. That is, both debit and credit entries are in the same account. At the end of the accounting period, control accounts are expected to have a nil balance. In summary, increase in asset, expenses, and drawings is debited, while increase in liability, equity, and revenue is credited. The rules of double entry based on the classification of accounts are: in personal accounts, debit the receiver and credit the giver. In real accounts, debit what comes in and credit what goes out. Lastly, in nominal accounts, all expenses are debited while all revenues are credited. The effect of double entry is seen on a trial balance, whereby drawings, expenses, and assets have a debit balance, while liabilities, equity, and revenue have a credit balance. This is a summary trial balance that shows that assets are expected to have a debit balance, liabilities are expected to have a credit balance, equity is expected to have a credit balance, revenues are expected to have a credit balance, expenses are expected to have a debit balance, drawings and dividends are expected to have a debit balance. In a trial balance, total debit should be equal to total credit. This confirms that the rules of double entry has been followed. Thanks for watching this tutorial. Kindly remember to subscribe to our YouTube channel, Treatise of Accounting Information Systems. Like this video, leave a comment and share with others.